The latest spate of bank failures has investor anxiety skyrocketing, and retail investors are scrambling to understand what is going on. Among the most highly searched questions, according to Investopedia, what is bank failure? What assets are protected in a bank failure? What is too big to fail? You get the picture. For more insight, let's bring in Caleb Silver. He's Investopedia editor-in-chief, friend of the show. Caleb, always great to see you. They're worried out there. Geez, these search queries are just a window into their psyche right now.
Absolutely. High anxiety. Somebody find Mel Brooks, because individual investors have been whipped around this week wondering what is going on. So we measure anxiety through what we call our anxiety index. This is search volume to fear-based terms around the economy, personal finance, and the markets. It is screaming like a toddler who just dropped its ice cream. First shock, and then the complete tantrum that follows, because they don't know if their money's going to be safe. And then they're watching this big sell-off that happened throughout the week in regional banks, wondering if this is going to be contagious all the way through the markets. A very heady time for investors.
Are they daring to go into bank stocks?
Yeah, when we look at what not only they're searching for, but what products they're looking for, they're looking at the top bank ETFs. They're looking at the banks that have fallen the most. They're looking at inverse bank ETFs if they want to play it down or play it up. They are trying to get promiscuous on the edge. Not everybody, of course. Most people are saying, what is going on here? I thought we were through this already in 2008. Some of these terms coming back, and just the psychological contagion is a lot for people. And that's why you've seen a lot of investors just sitting back and watching this play out this week.
Caleb, you also do the $10,000 question. And number one is shocking to me, the answers. But speak to this, because I'm fascinated by it.
Yeah, ETFs were popular because they don't want to be stock pickers right now, although if you gave them some extra money, they would buy individual stocks. So individual stocks top on the list if they had the extra cash. That's not what they've been buying lately, according to our most recent survey. They've been buying a lot of CDs. They've been buying a lot of money market funds. We were having this conversation 2 months ago. Same thing, except leaning a little bit more into those safer products because things just don't feel right out there, even with these bailouts, don't call them a bailout. Even with these backstops, it just doesn't feel right for individual investors. And you've seen money flow coming out of equity, mutual funds and index funds and into cash lately.
So give me a sense of this level of anxiety compares to, what was it, when Russia invaded Ukraine? How anxious is this? Sounds very anxious.
This is very anxious. Not, of course, March 2020 anxious, not Jan 2021 anxious, but right getting up there. But the anxiety is really around their personal finance right now. So searches for foreclosure, forbearance, searches for what happens when my bank fails, are my assets protected? Those are the ones that have been spiking a lot. Yeah, there's a lot of market anxiety. That's been around since the last 6 to 8 weeks, of course, and really the last year and a half, really. But really the anxiety is personal because people feel this personally first. Is everything that I've made protected? And then what can I do about this situation if I want to capitalize?
The survey closed when? Friday?
Survey closed Friday just as SVB was dropping, but we've been looking at the search activity since then because we didn't capture it in the survey. But the survey is also telling us what we knew all along. People are really cautious right now, wanting to put money into work, but just not sure it feels right.
What would you anticipate these investors, these people who are searching terms, to do in the next week? I mean, you've seen this window before. You've seen this sort of happen before. What does it look like it's developing into? Yeah,
I think people want to put money to work very badly. They've been waiting a long time to really do that. I don't think that they're going to see a green light necessarily to do that, but any hint of optimism or any hint of stability is going to put them back into the buying mode, and they want to invest. These are habitual investors, self-directed. They've been doing this a long time. Average age is north of 45, so they've seen cycles like this. They're just anxious to put money to work.